ever thought about how fake news can be used to manipulate markets? Well, some are calling April 9 the greatest day in the history of insider trading, and in the US, many are pushing for an investigation into potential market manipulation by the president. Good evening, my name is Maja Mazurkiewicz, and welcome to the Anatomy of Disinformation. The use of disinformation tactics to manipulate trade and markets is nothing new. In 2023, Silicon Valley Bank collapsed after a social media-fueled panic triggered a bank run, during which customers rapidly withdrew $42 billion. There's just one example of how quickly disinformation can impact the financial stability of a business and spark much wider knock-on effects. Investing in the market is a high-risk activity, but it's not just our wallets that are in danger. Market manipulation can have consequences at the macroeconomic and geopolitical level. In an era of deepfakes, hyper-realistic manipulated audio and video footage is being used more and more to impersonate executives and spread false narratives, undermining trust in financial institutions. We'll talk about all that and more with our guest.
Tim Weninger, Associate Professor of Engineering, University of Notre Dame. He developed early warning systems to combat disinformation and analyze the use of memes in spreading conflict and propaganda. Professor Weninger's research has contributed to our understanding of the history and future of misinformation, with funding from organizations like DARPA and USAID. Professor Weninger's research has contributed to our understanding of the history and future of misinformation, with funding from organizations like DARPA and USAID. He's an expert in machine learning, network science, and social media, focusing on how humans consume and curate information online.
Tim, thank you so much for joining us today, straight from South Bend. It's good to have you, and today we're talking particularly on how disinformation can affect markets and different behavioral actions of people, and that's exactly your expertise. So how you're researching how disinformation is impacting different behaviors?
Yeah, well, first of all, thank you for having me. To that point, my study is on how social media and the algorithm that we have online helps to curate, cultivate the information and the news that we see. And this is useful for all sorts of things, but in particular, markets. And so when you're trying to find something to buy, something to do, you're trying to find out what is high quality, what is something that you're interested in doing and looking at. The first place we turn often is social media. And what we find is that oftentimes people on social media will try to make something that is not particularly popular more popular. And so they'll try to buy likes and votes and shares and retweets and upvotes to try to take some idea, some aspect of some stock perhaps, some economy or some macroeconomic signal, and move it to the top of the algorithm, move it to the top of the news feed so that lots of people see it, and then they can say, wow, this is really popular. It must be high quality. It must be something that we should all be interested in buying, or soon everyone will want. When really that is just a disinformation tactic that is used to drive political and economic factors that are not necessarily based on reality.
And how, based on this, disinformation is different than the normal marketing?
Yeah, so normal markets is when intrinsic things move the market, where there's macroeconomic principles. People are buying, they're selling, they're spending money. But oftentimes what happens is when these markets are manipulated in the way that something that is not actually popular, something that is not actually high quality, is perceived to be the opposite, or something that is actually of high quality is perceived to be of low quality. And so there is an information war happening, and that information war affects directly the markets. And so if something that we see is going to be moving up in value, then people maybe want to buy it or jump onto that bandwagon. And the way that we try to kind of convey that information used to be in news reports and the tickers that are in the back of the newspaper. But nowadays, with social media, the way that we see what is valuable, what is high quality, is by what is at the top of the news feed. And so if you can get something to the top of the news feed, something to be trending or popular on Twitter or on Facebook, then you can move the market.
And does it depend whether the accounts that are spreading those information or disinformation are public trusted, or it also can happen with just fake accounts?
Now, public trust is a big part of it, but it's not necessarily the only way. If you get 10,000 or 100,000 accounts together and they're all liking and retweeting and upvoting the same thing, it will move the information to the top of the system, and that information at the top of the news feed will then be seen by lots of people. So while it is easier if you have a high trusted account, it's not necessary.
And do you have a specific example that you can share, especially in terms of the market manipulation or perhaps a cryptocurrency?
Oh, well, certainly. This is happening more and more frequently in the crypto markets, which are largely unregulated. So in the United States, where I'm at, if you were to try to perform insider trading or these kind of market manipulation tactics intentionally, that's illegal. However, in crypto markets, there is no such regulation. And so if you were to go and, let's say, start a cryptocurrency based upon some political or sports team or something, anything really, and you were to say, this is going to be the next big thing, and you say all of these people are buying it when really no one is buying it, but the perception on social media is that everyone's buying it, everyone's buying in. That perception is more important than reality. And then people will actually buy in, and by that time, you'll have the traditional market pump and dump, and the people who make these crypto coins can make a lot of money, and people who buy the crypto coins can lose a lot of money.
And there's quite a lot of influencers that are being involved in the crypto trading, and then they have big community, and exactly they are spreading those news, and then it's starting to...
Yeah, that's exactly right. There's in the United States, there was the Melania coin, there was Trump coin, and that's political, of course, but there's also many podcasters who got in with the cryptocurrency folks, and they put their name behind a coin, and the same thing happened. They made a whole bunch of money, these podcasters, and there are many of them. And
do we know even how much?
Those coins. I'm sorry?
Do we even know how much money they make out of the things like this?
It's billions. It's billions of dollars. And well, that's in total. Collectively, 10 million here, 100 million there, but collectively it's billions of dollars that are going into these crypto coins that people think are going to be worth money and then aren't actually worth anything.
Exactly, that's my question. Are they worth anything, or is it just like it's out there, it's being manipulated, and then you actually make the real money out of the proper that's or different communication? No?
Right, and that's a question that a lot of people argue about. My personal belief in this space is that these crypto coins do not represent anything, and so they are simulations of the economy, but they don't actually. There is no intrinsic value. There is no asset, there is no property, there's no commodity behind them. And so, in my opinion, they are not worth anything, and they never will be.
And the specific algorithms in different media platforms, or social media platforms, are there kind of supporting exactly those tradings or some of the emotions that are being based on? What is the drill there? Yeah,
that's in different platforms. If you're on Facebook versus Twitter versus YouTube or TikTok, there are different algorithms and there's different processes that drive the news feed. But it all comes down to there's some AI system, there's some algorithm that just decides, that determines what you and all of your listeners see on their news feed. And that algorithm is driven by who's sharing what and how many people are sharing what and how many people are sharing what at the same time. And those algorithms, they don't necessarily facilitate economic trading, for instance. You have to go to a broker for that. But what they do influence is your perception of quality, your perception of reality. And one thing we know about economics is that the perception and how you feel, if you're excited or if you're sad, that determines where you see the economy going. And if something can make you excited about maybe a cryptocurrency or some stock, then you'll be more likely to buy it. And there's been lots of research done over the last decade about how what the social media sites show you actually will change your mood. Social media can make you excited, it can make you depressed. And that determines how you're going to spend your money.
And well, that's also in terms of polarizing the societies. And a few years ago, you've been writing and talking quite a lot about hives. Is it still there?
Yeah, so in that particular case, I have been looking at what we call the hive mind. And the hive mind is where people who believe what everyone else believes. And so that goes to this question of perception is more important than reality. And so if I'm going through and I'm seeing a collective opinion repeated over and over and over again in my tweet stream or in the news feed or in some comments, I will start to believe that myself. What you read influences who you are and how you perceive the world. And if you see something over and over again, collectively over time, you will start to buy into that narrative. And I'm guilty of this myself, and everyone is. It's hard to resist the temptation of, because humans are social animals, we want to be part of a group, part of a collective. And if we see that everyone thinks a certain way, we're more likely to think that way as well. And that's something that we've known for decades now, but is really borne out on the social media sites now.
And it's important to talk about it and to use the social media consciously, because we are also the ones that create it. Thank you so much for joining us today.
Thank you.
Now, let's take a brief walk through the saga of GameStop, a video game retailer kept on life support by its die-hard fandom. We look into the inner working of this phenomenon and find out how a group of unlikely Reddit users managed to disrupt the stock exchange.
Yeah, the surprising story of GameStop really begins with the company itself. So GameStop, if you don't know, is a brick and mortar retailer in the United States that sells video games. It was very, very popular as a business in like the early 2000s, before, right, like online gaming drifted to like smartphones, right, and other easily accessible platforms that are on the internet. So flash forward to just a few years ago, and so its stock naturally had been falling quite steeply. So there were a number of hedge funds that were trying to short the stock, right, and make money on it, losing money. When this was all unfolding on Reddit, there were a number of sort of amateur enthusiasts in trading who sort of noticed that this was happening, and decided to band together to perform what is known as a short squeeze in finance, where they were going to try to raise the price of the stock to basically punish these hedge funds who were trying to make money on the eventual demise of their beloved game store from their childhood. And this becomes incredibly popular. It attracts many thousands of amateur investors. It makes the mainstream financial news. It extremely upsets a lot of folks on Wall Street, right, who are trying to make money on a particular play and are now losing money because a bunch of folks on the internet decided to band together, right, and push back against that. And then, of course, right, the stock starts to go up. So that attracts other investors who want to make some money on this, right? Jump in while it's still low enough, knowing that, again, this price is going to keep being pumped up to try to perform the short squeeze as aggressively as possible. And so, again, this became a meme on the internet. There's like associated imagery. And to this day, it has not stopped. I think there's a really interesting interview with Elon Musk from a few years ago on the Lex Fridman podcast, where he says Tesla's real strength as a company is not really the product, it's its ability to generate press, right? And that storytelling element like comes first in the company. And I think that's been his whole career. You can think of him almost as like the P.T. Barnum of today. You know, he's like really like a showman. And he says all these fantastic things. And in some cases, again, he's talking about something that is real, but in other cases it's not. But like it continually brings attention to him and his company. That storytelling element's really key. Like politicians all over the globe do this, successful business leaders do this, and even amateurs on the internet, right, do this. So this of course is a well-known phenomenon within human psychology. I don't think anybody has ever cracked that code. If you look into the literature on social manipulation, the name Edward Bernays comes up quite a bit. Bernays is an important thinker in the area of mass communications. He comes up with this idea of social engineering, where if you have a well-designed PR campaign, you can get these bandwagon effects.
How do we consume social media, and what is group behavior in the context of disinformation? Can cognitive science and our understanding of human behavior in social media environments help us protect ourselves against disinformation? Let's ask our guest.
Andrew Kosenko, Assistant Professor of Economics, School of Management, Marist College. He's an expert in information and behavioral economics, focusing on strategic communication, the value of information, and models of memory and learning. He received his PhD in economics from Columbia University in 2018 after completing his undergraduate degree at New York University. He was a visiting assistant professor at the University of Pittsburgh and served as an associate in business at Columbia Business School.
Andrew, thank you so much for joining us today, straight from New York City.
Thank you so much for having me on, Maya.
Thank you. And today we're talking about how disinformation and influence operations can affect markets. And especially it's interesting with the case that happened on the 9th of April. What exactly happened there?
Sure. In that specific case, there was a tweet from an account on Twitter. The account had a blue check mark, which used to mean that the account is verified, but after Elon Musk bought Twitter, you could just pay to be verified. And the content of that tweet related to the tariff policy. And the content of that tweet was basically saying that somebody else had said that tariffs are going to change.
And that didn't happen yet.
And that had never happened. The tweet referenced a false statement, and because it was so difficult to check, and it took time to check, many TV anchors, including CNBC, basically said, "Look, we can't check this right now, but it appears that this is going on, and people are talking about it, and so we're going to report it on TV." And because of that, the market started to move.
And pretty much at the same time, there was a tweet from President Trump, or not a tweet, it was on his own kind of truth account.
Absolutely, that's absolutely correct. That may have been slightly different. So the first tweet was from an obscure account. It was just not a very popular account. It had some followers, but not a lot. And on April 9th, I believe, just a few hours before the announcement of the pause in the very, very high levels of tariffs that President Trump had imposed on most of the rest of the world, President Trump tweeted on Truth Social, and then it was, of course, retweeted on other social media platforms that, quote, "Now it is a great time to buy." At that moment, because of the imposition of tariffs, the U.S. stock market and really stock markets around the world had really plummeted. This was not the worst decline in markets in history. There have been worse, but this is one of the bad ones. So markets declined by something like 10% or maybe a little bit more. And President Trump tweeted that now is a great time to buy. Possibly because prices were low and he was trying to inflate the market by generating demand, or it's probably more likely that he had by then already decided to rescind the tariffs that he had put in place. And he was communicating to his supporters, to people who believe in him, that this is a good time to buy. And this, of course, is if that's the case, this is pretty obvious market manipulation. And there has been a lot of conversations in the US whether that was, in fact, market manipulation.
And let's see where it's going to go. But it's also not the first time that something like that happened. It's also about how politics and economics are intersection is there.
Yes, absolutely. It's not the first time that something like this, like a social media story, goes viral and changes for reasons that have nothing to do with reality, the dynamics of the market. More generally, it certainly happens in financial markets. It happens more broadly in the economy. And often, sometimes what happens is firms achieve some economic power, which then they translate in the U.S. Through lobbying into political power, and that allows them to consolidate because they can ask for preferable terms or help design legislation that regulates them. That translates into even more economic power. So there's a cycle of economic power, political power, more economic power.
Andrew, and disinformation is also used as the war tactics. You are from Ukraine. What are the consequences for Ukraine, especially in terms of the economics as well, while they are at war? It also affects the economy of Ukraine or the trades with other countries?
It is because Ukraine has lost all those territories. In particular, if we would like to talk about a little bit more of the economic side, Russia has been trying to undermine the efforts to rebuild some of the Ukrainian enterprises that are in Ukraine. Such as the South Design Bureau, the Yuzhny Design Bureau, which used to design nuclear missiles during the Soviet Union. In the 90s, it was struggling. It was not at its best, and Russia has continued to undermine its activities and to spread the view that this enterprise is dead. It is, of course, not dead. It is functioning, and it was the target of one of the strikes. But this is just an example of how Russia is trying to undermine a truly strategic enterprise, a place that is capable of building modern defense weaponry for its advantage.
So basically, we see very much how disinformation is influencing the markets and the economics. And my last question is, how to combat it, and what can we do to protect the markets?
Absolutely. This is a critical question. It would involve coordination. It would involve a multi-pronged strategy. Media platforms, Twitter or X, Instagram, all of these platforms do have a role to play. They can put a community note. They can put a note on the post that says this post uses incendiary language. This post uses hateful language and so forth. Because of their access to giant amounts of data, platforms are also the first place that can identify coordinated misinformation. They are able to track and understand where these posts, these likes, these comments are coming from and whether they're coordinated. So it's critical that platforms have strategies to limit the spread of mis and disinformation.
From the market's perspective, are there any key cases that can protect the market manipulation?
Sure. Campaign and funding transparency laws are absolutely critical. There are efforts to counter disinformation in real time, and sometimes known as pre-bunk as opposed to debunk. Pre-bunk narratives and say, look, this is not true. And this is perhaps the most difficult one. Individual information literacy, so that reporters, so that people in the media and individual investors, people who work in finance companies, are able to say, look, this is a tweet. This is a baseless tweet, and we cannot verify it, and therefore we will not act on it.
Andrew, thank you so much for joining us and describing in details how it works and how dangerous disinformation is in terms of the markets.
Thank you very much, Maja, for having me on.
It's a great time to buy. A single tweet can trigger an avalanche of stock market trades, especially when the name behind the account enjoys significant public trust. Sometimes you can even make money of it, but more often than not, someone else is making much more. With deepfakes everywhere you look, it can be hard to know what's true and what's not, especially at first sight. So till next time, keep calm and think deeply.